Hello guys, welcome to another session. In this session we are still going to be looking at point of interest, how to identify a valid point of interest. So just follow along this video. If you don't know what is a point of interest, please go and watch the previous video that I dropped on point of interest. We explain point of interest in that video. So go and watch that video, share and subscribe as well. So let's look at point of interest on this BTC now. Like we in our previous video, I said that what I consider in point of interest as my own point of interest are liquidity areas. So let me say this again. A point of interest is the zone or that area on the chart where you are expecting price to react, either reverse or continue. So any point on the chart where you are expecting price to move to for then a certain reaction, either the price will continue in this direction or there will be a reversal in the direction of price. That point is your point of interest. Other people will call it turning point. Other people will also call it turning point. So a turning point is the point where you are expecting a reversal, you are expecting an activity, you are expecting movement, either reversal or continuation. That is a point of interest or a turning point. And now, what is liquidity? The point of liquidity is that area on the chart where there are so many unfilled orders. Is the area of the chart where you have so many unfilled orders. So if maybe you go to any point on your chart, let's say we have BTC here. So at this area on your BTC chart, you are expecting that there are so many orders in this area that are not filled. Stop loss, limit orders, stop limit orders, trailing stops. There are so many orders in this area that are not filled, and these are the areas where institutional buyers are interested in. So you might see the price might just come to this place, take out those stops and bounce back. So this is what is going to give you very precise and accurate analysis, because if you observe, institutional buyers, they are always interested in liquidity areas. Why? Is because they want to have enough money to push the volume that they are interested in buying. So if institutional buyers want to buy, let's say $1 billion Bitcoin at this market price, and the orders in this price cannot fill up to $1 billion, they will have to push the price into an area where they will be able to get that $1 billion. So, and the moment they buy that amount that they are waiting for, you will see price will now push back to the opposite direction. So this area where you have a lot of unfilled orders, is where we refer to as point of liquidity. That means on your chart, like here on BTC now, you will notice that at this very place on BTC, there will be a lot of stop orders. There will be a lot of either limit orders. There will be a lot of stop losses in this particular area, because it is an area on the chart that we are expecting institutional buyers to move into. So there is a lot of stops in this area, and that is what we'll be considering. Now, before we talk about how to identify key areas or liquidity areas that we are going to consider as our point of interest, let's first look at invalid areas of interest. Because some people might just consider an area, they don't know if this area is still valid or this area is no longer valid on our chart. So let us see something. Let us take a look at that. So what is a valid point of liquidity? A valid point of liquidity is the area where price has not taken out. Like this point, this is a valid area of liquidity. This area is a valid area of liquidity. This area is a valid area of liquidity. And what is an invalid area of liquidity? The invalid area are the areas where price has moved into that area, taking out liquidity and has retraced. So, and one area that is invalid here, you can see this point on this chart is invalid. This particular area on the chart is invalid. So you will see that when price got to this area, now this was a valid area of interest, but when price moved into this area, which is here, which is this part, price moved into this area and went up and came back with this movement. You see this other movement. This is the entire movement that invalidated this area. Let me click. Now this area on the chart was a valid liquidity area until this movement came in. So now this movement that price moved below this area is what invalidated this particular area of liquidity. Is what invalidated this area of liquidity. So follow me, guys. So now you'll be able to know a valid and invalid area on the chart. So now the valid area of liquidity is the area where price has not taken out. The invalid area is the area where price has taken out. So let's say before now you had this place as your area of liquidity. You had this place considered as area of liquidity. You had this place considered as an area of liquidity. Now, this price came and took out this area. Price came and took out this area. This area of liquidity is no longer a valid area of liquidity, because the next time price will come, price is not looking to stop hunt people in this area. It has already taken out people in this area. This is your new area of consideration. You get me, guys? This first area is no longer valid. This first area is no longer valid because price has taken out that area. The valid area of consideration now is this second area. Of liquidity. That is the valid area now. So some people will make the mistake. They will draw only this line and allow it and be using it to get maybe as point of interest. They expect that price will be coming every time to touch this place and make a reaction. No. Once you do that, leave this thing to be trading every time, you don't identify the area that is valid and the area that is not valid, you keep getting wrong signals. For you to remain ahead of the market, always adjust your area of interest. Once an area of interest is taken out, just know that it is time to mark out another area of interest that is valid. So in that way, you remain at least 70 to 80% accurate in the market, because you are no longer considering an area where it's invalid. You are looking at a valid area. Now look at, like now at the top, look at the top, you see this area. Now this area on price move into this area and retrace. It did not break above that area, so that area of interest is still valid. That area of interest is still valid. Let me mark it out. Now this area of interest here, this is another liquidity area on this chart. This area of interest is valid until BTC will do something like this. Move into this place, come down. Now, come here. The moment you see something like this, this area of liquidity becomes invalid. The moment you see something like this, this area of liquidity becomes invalid. This area of liquidity also becomes invalid. So let's see. Then let's say price will now do something like this. We'll come back after taking out these areas of liquidity. We'll come down and maybe it can come to here, then start moving up. Now, in this case, this area of liquidity has been invalidated. This area of liquidity has been invalidated. So what are we going to do? We are going to remove this very area of liquidity that has been invalidated from our chart. I will now have to go and remove this one. We now go and remove this one. It's no longer our area of interest because it has been invalidated. What is our new area of interest? Our new area of interest now will be placed like here. Here becomes our new area of interest. This other area too becomes our new area of interest. The places that price has not taken out. So that place too becomes our area of interest. And now, if you go down, you also see other areas of interest that are here. You see this other place below becomes our area of interest as well. So our valid areas of interest are the areas that price has not taken out. The moment price takes out an area of interest, a liquidity area, you have to clean that area from your charts and draw another new area of interest. So like this, like here now, like here, I'm going to delete this particular and adjust it. I need to adjust it because I'm looking at liquidity. So I need to remove this one, adjust it. My area of interest now will now be somewhere like here. Will now be somewhere like here, no longer the previous area of, because that place has been invalidated. So I hope you now understand how to identify a valid area of interest so that you can always trade and remain ahead of the game. Now, there's one thing I want you guys to understand. The moment there is a point of liquidity, the moment there is a high, once the price prints a high, it makes the previous high stronger or low stronger. In essence, what I'm saying is that the appearance of a new high or new low makes the previous high stronger. What I mean is that now you can consider, let me clean the charts. Now you can consider you can consider this point as a low, this point as a low. Okay, let's put this one as a low, this as another low, and something here. Now, the appearance of this low makes this one stronger. The appearance of this low makes this one stronger until they get invalidated. The appearance of this one makes this one stronger. Why is it stronger? Why is it stronger? It is stronger because you will require a lot of volume. Let's say the price of Bitcoin is here. the price of Bitcoin is here, there is a low here, there as another low, or let's say a liquidity point. Now it will take a higher volume to break this point. Let's say this point, we are considering this point. It will take a higher volume to break this point. It will take a lower volume to break this other first low, but it will take a higher volume to break this one. So that is why when you see I am marking on my chart, any point that the price is very close to, I will mark it as a weak area of consideration. It's not like price will not react to that place. Price will react, but it will take a lower volume. The volume that it takes, the volume that we take for Bitcoin to break this place is lower than the volume that Bitcoin will require to break this other low. So the presence of this low, the presence of this high, the presence of this lower high makes this lower high a stronger one than this one. I hope you guys get what I'm saying. That is just a secret, and that is why as any point in any of our point of interest gets invalidated, we look for a new point, because as the price is moving, it is always creating a weak highs and weak lows, strong highs and strong low. So we want to be in a position where we want to sit at the strong low or strong high or strong point of liquidity, so that the moment price plays into that point, it can give you easy pullback or easy reversal. It can give you an easy reversal, so that you can just look at, let's say someone that has placed a trade here. Someone that has placed a trade here. Someone that has placed a trade here, and someone that has placed a trade on this place. Which one will now make a profit? Now let's say the price of Bitcoin was coming from this direction. Now if I am to mark, I will mark this low as a weak low. I will mark this one as a strong low. You know the colors that I use when I mark my chart. So because it is going to take Bitcoin a less effort to break this first one than breaking this second one. So just know now that the appearance of a new high or a new low makes a previous high or previous low stronger. So that way, when you are trading, you know what to expect. And these are what will give you good entries. When people tell you about sniper entries, good entries, these are the kind of observations that you have to do to know where price will actually reverse. You know where price will react to, and maybe you can make a continuation. You also know where price will get to, and there will be a reversal. I hope you have learned something. If there is any other thing you want me to explain in this video, drop a comment. Please don't forget to subscribe and share. Till next time, guys, I'll see you. Please share this video to your friends that are still confused to identify highs, lows, or valid and invalid areas of interest. Share this video. Until next time, see you.